The year is 1910. The United States, a burgeoning economic power, grapples with financial instability. Panics and recessions plague the nation, exposing the fragility of its decentralized banking system. A powerful group of financiers, led by Senator Nelson Aldrich, sees a solution in the creation of a central bank. Their vision, a powerful institution with the authority to control the money supply, stabilize prices, and prevent future crises. Public opinion, wary of concentrated financial power, stands as a formidable barrier. Aldrich and his allies understand that their ambitious plan demands a high degree of secrecy and meticulous strategy. In November 1910, a small group of men board a private railway car in New Jersey, their destination Jekyll Island, Georgia. This secluded island, a hunting retreat for the nation's financial elite, provides the perfect cover for a secret meeting of extraordinary importance. Among the passengers are Senator Nelson Aldrich, the powerful head of the National Monetary Commission, Paul Warburg, a German-born banking expert, and representatives from the financial empires of J.P. Morgan and John D. Rockefeller. These men, representing the pinnacle of American finance, embark on a week-long mission to reshape the nation's monetary system. Their journey is cloaked in secrecy. Code names are used, and even the servants are kept in the dark about the true identities of the guests. The true purpose of their gathering, to draft a plan for a central bank, an institution that would come to be known as the Federal Reserve System. They know that their ideas, if exposed to the public, would face fierce opposition. At the heart of this secret meeting stand two figures who play pivotal roles in shaping the future of American finance: Nelson Aldrich and Paul Warburg. Aldrich, a Republican senator from Rhode Island, wields immense political power and serves as the chairman of the National Monetary Commission. Tasked with finding a solution to the nation's recurring financial crises, Aldrich becomes a staunch advocate for a central banking system. Paul Warburg, a partner in the prominent banking firm Kuhn, Loeb & Company, brings his extensive knowledge of European central banking to the table. Warburg believes that a central bank, modelled after the Bank of England and the German Reichsbank, can provide stability and prevent the boom and bust cycles that plague the American economy. Together, they hammer out the details of a plan that would fundamentally alter the financial landscape of the United States. The shroud of secrecy surrounding the Jekyll Island meeting raises suspicions. Critics argue that the secrecy stemmed from a desire to shield the interests of powerful bankers who stood to gain from a central bank. They point to the fact that the proposed Federal Reserve System would give private bankers a significant degree of control over the nation's money supply. The secrecy surrounding the Jekyll Island meeting, intended to ensure the plan's success, ironically sows the seeds of distrust and suspicion that would dog the Federal Reserve throughout its history. The Jekyll Island meeting proves to be a turning point in American financial history. The Federal Reserve Act, heavily influenced by the plans drafted on that secluded island, is passed by Congress and signed into law by President Woodrow Wilson in 1913. The Federal Reserve System, with its 12 regional banks and a powerful board of governors, becomes the central bank of the United States. The Fed, as it comes to be known, is granted broad powers to control the money supply, set interest rates, and act as a lender of last resort to commercial banks. Its creation marks a significant shift away from the decentralized banking system that had characterized the nation's early years. The Federal Reserve's impact on American banking is profound. From its clandestine origins on Jekyll Island, the Federal Reserve has evolved into one of the most powerful economic institutions in the world. It plays a pivotal role in shaping economic policy, influencing interest rates, inflation, and employment levels. The Fed's actions have a ripple effect throughout the global economy, making it a subject of intense scrutiny and debate. Its supporters argue that the Fed provides stability to the financial system, prevents bank runs, and acts as a crucial backstop during times of crisis. They point to its role in mitigating the 2008 financial crisis as evidence of its importance. Critics, however, contend that the Fed's policies often benefit Wall Street and the wealthy at the expense of ordinary Americans. The legacy of that secret meeting on Jekyll Island continues to shape the American economy and influence the lives of every citizen.